I'm going to give you guys a foundation to work off of, something pretty simple and basic, a strategy, but a basic strategy that I think is easy. Although the hard part does come in terms of gathering data. Maybe you might have not even heard about this. Actually, this needs to be updated. Actually, let me update it real quick for you guys. All right, here's a recent one. So I took a couple of trades right now, so I had to update it. But here's essentially the most difficult part in terms of trading here, and that is gathering data. So you need to document every trade that you took, and you need to kind of gather data, see what works and what isn't working. The only thing that I'm gathering here, or a couple of things actually, moving averages. So I'm seeing if the price is above the moving averages or if it's not. Other things are the size of the elephant candle and where it's closing. You'll understand this once I break down the strategy a little bit. I'm looking for the elephant candle to close at around 80% or even 75 would be good, but anything lower like the 55% mark, that'd be a poor. So I'm gathering that data and seeing that, well, is it actually something that I need to consider or not? For example, this 55%, which essentially means that the candle is closing at the 55% mark from the bottom of the candle to the high of the candle, and this would be considered poor. So if this isn't even a big factor to consider, then I probably won't even need to adjust it. So the more data you have, the better support you'll have to adjust your strategy if you need to. So for example, if I'm realizing that maybe I'm losing more in the ones that have no resistance that's being broken, then maybe I'll only trade the ones that are breaking some form of resistance. So this is really the hardest part of trading here, gathering data and learning from your mistakes and actually fixing them. So as of right now, I only have 2 weeks of trading this strategy, and so far it is profitable. I'm up nearly 10% of my account, so I'm starting off with a $5,000 account. This is a simulated account simply because I wouldn't suggest or I advise you trade a new strategy with real money. It just makes sense. You don't want to be putting your money into something you don't even know that works. So this is pretty much the result of around 23 trades, I think it is. 2 weeks of trading, so really good data, but it isn't as much as I would like. So of course, the more data, the better. I'm going to keep trading this until I gather a lot of data. And in fact, I don't think I'll even stop gathering data, just simply because the markets tend to change and you want to have some experience in different environments. So for example, maybe one market will require you to take profits within 3 days of the entry, and other market environments will have you taking profits at around 6. So maybe you'll have, or to put it differently, runners that have 6 days of running as opposed to 3 days. So that's just an example of what gathering data could lead you to. And that's the hardest part. The easiest part is actually just executing and learning a simple strategy, which I'm going to give you guys right now. As a matter of fact, here is the criteria. You look at the top gainers, explosive volume, some form of resistance that is broken, or range, whatever you want to call it. A downtrend, don't go along something that is in a downtrend. Uptrend, so this would be ideal. Moving averages, of course, the elephant bar needs to close above all the moving averages with the exception of the 200 moving average, but if it does close above it, then that's even better. Hard stop loss, so this isn't necessarily a hard stop loss per se, it is a mental stop loss, but I'll go over what I mean by a mental stop loss / hard stop loss in just a second. So trailing methods I use is the 10 simple moving average, reversal bars, or I am looking to also use the prior bars low. Profit targets at around 100% return, so when the stock goes up 100%, which actually tends to happen more often than you think because we're trading penny stocks, and I'll get into that right now as well. Scaling out, sell only 50% of your shares during the first profit target that is reached. Entry and exit times only 10 minutes before the market closes, so I am entering these stocks ideally in the last 5 minutes of the day, but since I do run a Discord and I do give out my trades as soon as I take them, I tend to take them a little bit earlier or a little bit before the 12:55 mark. The heat map, this is something I don't use, but I probably will use as I gather data. Again, this is something that will probably be considered and be used as my system matures. Important rules, so this is something very, very important, and I think people really miss the point on, and that is your allowable max risk. So in my case, it is going to be max 10%. This is an aggressive trading strategy. I do run 2 systems or 2 strategies. One of them is pretty passive, minimal risk, and this one is a aggressive strategy, risking 10% of my account. So on a 5K account, you're only risking $500 per trade. And what I mean by that, I don't mean putting your stop loss at the $500 mark. I mean entering only with $500, because we're talking about penny stocks, so these things could come down 90% overnight. So you could literally lose, like, I mean, if you have your stop loss at 500, you'll probably be losing way more than that. So that's why it's important to only enter with $500. That way, if it does come down 90%, you'll probably only lose like 450 or somewhere around that mark. Minimal trades exposure, 3 trades is enough. Be picky, not greedy. So I'm not doing this simply because I'm only gathering data right now and seeing what works and what doesn't. But this is something that is definitely going to need to be implemented again as my strategy matures. So that's the strategy right there, and this is an example of the strategy here. So we have some resistance on aggressive elephant candle, and this yielded around 100% return. You had a couple of opportunities to exit here on a reversal bar, a crossover, and then another crossover as a last resort using the 20 simple moving average, but ideally you would exit and the 10 simple moving average. Stop loss, I haven't talked about stop losses, but the stop loss is set at the 50% mark of the entry elephant bar's body of the candle here. So around this area right here, no hard stop loss. The candle, if it is a red candle, it needs to close below that mark, so around 12:55. If the candle is under the 50% 80% mark, you will have to close that. So I'm going to go over a couple of examples here that I am holding right now, and also a couple of trades that I did take today, a couple of exit points that I did take today, because I do have a couple of trades over here that I took today, taking a couple of losses. One of them was JAGX. So this is a good example here of, well, let's take a look at it here. So JAGX is a prime example of how things could go bad very, very quickly. As you can see here, we entered, and firstly, this was a poor entry on my part. Not gonna lie. I mean, let's look at the spread here. You'll see on JAGX over here on the left here. So it was okay. Prior range small. I mean, it wasn't really considered a range. No real resistance. So no break. 150 volume. The volume was good, but everything else besides that was pretty poor. So I just gave it an okay. It could have been worse. Not gonna lie. The moving averages were good. Elephant candle. Here's where things went wrong. 50%. It only closed 50% from its high. So this was really poor. And that's probably the reason why it just came down so aggressively today. I mean, this could have been classified as a reversal bar, actually. So we entered on that, and we ended up taking a major, probably a 30% loss that I think it came down to. Let's see. So yeah, it came down 40% today. We ended up taking like a $200 loss. So again, another reason why you don't want to have a hard stop loss and only risking $500 at this point right here, because if you have a hard stop loss at this point and risking $500 at this point, you would have probably ended up losing like twice the size of that. So you probably would have been down like $1,000 right now. So again, only enter with $500 on these trades. In fact, let's look at one of the trades that I barely entered today, which is ACRX. Prime example here of what I'm looking for. We have a nice little range right here. Aggressive, explosive candle, closing definitely above the 80% mark right here. Taking a look at our spreadsheet here at the most recent one, ACRS. Again, prior uptrend, so we're in an uptrend, so that's good. Weak resistance, but it's still broken. 330 volume, that's good. Moving averages, all of them are, or the prices above all the moving averages, so that's really, really good. The elephant candle closed above the 85% mark, so that's great. So that's really what I'm looking for. As you can see here, it's kind of like a 4 to 6, probably 4 of them being poor and like 6 of them being great. So I'm really trying to improve my accuracy here and only going for the 85% marks here. Of course, as time goes on, I'm going to be improving that. But for right now, it is just a matter of gathering data here and learning from your mistakes. So what you're looking at right now is a prime example of what I'm looking for and a prime example of what I took today. Stop loss at around this level right here. I could calculate it, but I only do calculate it when it's actually necessary. Probably tomorrow, if I see that the price is going around that area, I will calculate where the halfway point is from the low to the close of today. And then I'll mark it down here on my chart and just exit out if tomorrow's candle closes below it. So I am swing trading here, probably holding these trades a couple of days here. Something else to consider is a time stop loss. So I haven't really gathered enough data to say definitively when a good time stop loss would come, but I think roughly around the third day, the fourth day is typically when these stocks tend to peak, and then after that they just die off. So something else to consider, and also why it's important to gather data here. Let's take a look at another example here. Tigo is a prime example here of a 4-day runner. I did enter on the second day simply because the first day I didn't think it was good enough. Second day had roughly the same volume, still a lot of volume there, but the candle was more explosive than the previous one. So I entered long there, and it's been running for 2 days. We're probably up so we're up 52% right now in terms of this trade, not really hitting our 100% mark yet. Probably around right here we will be. At this point, I'll sell 50%, leaving the rest either for more upside or if we see a reversal bar here forming, we'll just simply cut the trade out like we did, for example, on the. So there was one trade that we exited out today, and this is gonna be the final one, and then I'll just end the video right there. Hopefully you guys did learn something. I think it was EVTV, so $276 profit here. EVTV, let's take a look at it. EVT here, we entered on this aggressive candle right, as you can see, prime example, closing above the range or the resistance level over here. We did have some more resistance level all the way up here. As a matter of fact, in terms of this trade, we actually did gain around 90 to 100% intraday, but I don't exit intraday, which is something that I probably should consider. Again, as I gather data, I'll realize that maybe I do need to set limit orders in my 100% mark and then just take a profit there. But the candle ended up closing a little bit low, and then the next day we just kind of grinded up lower. Today we just got a reversal bar red candle, so I didn't really like it. I decided to just close my position there, taking a $270 profit, definitely bringing up my winning average. So good trade overall here, pretty much what I'm looking for, and I think you guys got the point now. I hope you guys got the point. Something else you could use is the prior bars low. So for example, here we're grinding up here. If you were using that trailing profit method, you would have closed only if the candle closed below the prior candle. So these are just examples of what you could be adjusting to your strategy, but you can't do any of that until you really understand what you're looking for and what you're trading here. And so again, this goes back to the very basics of the strategy here, the foundation, the technical analysis aspect of it. But I'm gonna end it right there. I hope you understood something. If not, make sure to join the Discord here, take some of these things. I do have another strategy here that I offer, a little bit more complex, but roughly the same thing. Looking for breakouts here. I send out a watch list for both of the strategies here. The breakout one in the Elephant Strategy watch list. You can see I sent out the ACRS trade earlier today at around 12:45, entered at around 12:50. I sent that out 12:53. So you had a couple of minutes to take that trade if you really wanted to, or if it looked good. But with that being said, if you have any questions, comment down below or join the Discord and ask me right there. I'll be glad to help you guys and give you guys the best information that I could possibly. But with that being said, it looks like we have a profitable trade so far. I know we're up 10% in just 2 weeks, so that's definitely well above expectations. And again, everything here is legit. Even though it is a simulated account, so you could say that my emotions aren't really letting me experience the full thing. I really doubt that. You really shouldn't even be thinking about the money when you're trading with real money. That's just a paradox. In fact, if you think more about the money, you're more likely to lose the money. But whatever the case may be, I have all my trades here. I've been sending them out since I started. Again, I have my spreadsheet here, the same spreadsheet you're looking at right now, but just a week ago. So this is probably the first couple of trades that I took. We're down 256, and as of right now, we're up 500 and something. So here's just the proof of that if you really want to analyze my trades here. But besides that, hope you guys enjoyed. Make sure to leave a like, comment, and subscribe. I hope you guys actually learned something from this. Stay focused.